Hey, what's up guys? Alan here with EatSleepTrade.net. Going to be bringing you guys the swing trading watch list and market update for the week of June 6, 2016. I think this image is pretty appropriate for current market conditions, and it asks, where will the market go next? And I think that's an interesting question because if you get on social media, you're going to find 20,000 opinions of 20 different ideas of whether the market is bullish or bearish, whether it's going up, going down, if it's going to crash, if it's going to break to new highs. And the reality is, nobody knows. But we're going to get into what we think about the SPX, some key areas where we're at, and possibly where we might be headed next. And then we'll also take a look at a couple of my favorite setups going into next week. Alright, so sit tight and we will be back in just a second. Alright guys, welcome back. First thing we're going to take a look at is of course the S&P 500 to take a look at where we are. And this 2100 area I've talked about a lot, and that is a very significant resistance area and an area that, in my opinion, is the key to get above to where we could see a test back to all-time highs. Doesn't necessarily mean that we can get through to new all-time highs because we get above 2100. No, not necessarily. But that 2100 area is very key, and I think we start getting above that, we got a pretty good shot of at least testing those all-time highs. So a couple things I want to note here. I'm going to zoom in a little bit on this, and the first thing is our moving averages. So you can see that our 20-day moving average is attempting to cross back above our 50-day moving average, which is a good sign. We've had some pretty high relative volume just a couple days ago on the 31st. Our moving averages are now curling back up, and we're going to get that cross of the 20, hopefully above the 50-day moving average. And some really key areas right now, of course, is this 2100 resistance area, and then of course this 2075 support area. And I know there's quite a few lines on this chart, but they've all stayed pretty relevant and pretty important, falling down to 2055 support, 2040 support, 2020 support, so on and so forth. So those are all major, support areas and two major resistance areas that I think matter most right now. I think it's also important to, point out that all of the bears were extremely stoked on this head and shoulder patterns, and I can almost guarantee that people were shorting all the way down into this 2020 area, where it completely reversed very quick. As you can see, in 4 days it came right back up and tested that 2100 area again, and this pretty much entire week has tested that 2100 area. And another kind of interesting thing to take a look at is how the market's been moving. And the market's been gapping down, selling off, and grinding all the way back up to its highs. So gapping down, selling off, and grinding all the way back up to its highs. Gap down, huge sell off, and again grinds all the way back up to its highs. So though there's this insane resistance here at 2100, there's also a lot of support coming in on all these sell-off, gap downs, and dips, pushing the SPX all the way back up to its open highs. So pretty important to note that though we've had multiple attempts now to try to get above this 2100 area, any dip that's come down above 2075 has been bought up very quickly and very rapidly. So I think that's a good sign. I think that last week we got a close above 2100, which is huge, and I think coming into next week we can see some moves, some strong moves above 2100 that can give us some confidence in saying that the market will stay above 2100, and then we'd like to see 2100 start to act as a support as that resistance is broken. Alright guys, so that's enough about the SPX. So let's take a look at a couple stocks to add to the watch list for this week. First one, let's look at FIG. We've had this one on our watch list actually back in March. We were anticipating this break over 45, which you could see actually did occur on pretty big volume, but was unable to hold and eventually kind of sold off into this consolidation period. And after that, removed from our watch list, and we weren't really watching it too much more. However, it has come back up on the scanners now. You could see the high relative volume down here on the bottom. So it's traded 2 million shares when it's averagely trading 250 to 300,000 a day. So that's an important thing to note. Another thing is our 20-day and 50-day moving averages are still trending in the right direction. The 20-day has held above our 50-day, and they both kind of look like they're going to want to start to curl back up. So I like the relative volume. If I get some continuation into Monday, that could give a really good buy opportunity with a really good risk versus reward. The low on this day was only $4.95, and it closed at $5. So basically, if you bought at the end of the day and using low day as risk, you have a 5-cent risk. So that's really good. So we'll definitely be watching this into next week, kind of looking for that move towards 510 and hopefully a breakout on this wedge pattern. You've got your prior highs here at 510. You've got a prior high here at 520. And then another prior high here up at about 540, 542. So those are going to be some pretty major areas to watch. And not just the wedge itself, but this little consolidation right here is also a good thing to keep an eye on short-term wise, and then you have a much longer term a pattern that's forming as well. So next up on the list, let's take a look at WERN. This one popped up on the scanners here again due to the relative volume. It's got a really big range, so you definitely want to be careful with stocks like this that have such a big range. You're talking $2 just on a single day's worth of range when it trades this high relative volume. The good news is it managed to hold above its 20-day moving average, though it did test down below. Plenty of buyers to step in and buy the dip up and push it back up, creating not only sort of a hammer candle, but a big engulfing candle over the previous red day. So I'm thinking we see a test up to this 50-day moving average, currently sitting at about 2560, and if we can hold this higher low down here, it could possibly start seeing a move back up to the top of this resistance area here around $28, and that is a pretty significant resistance area. Of course, you can see that though a couple times before it's tried to break above it, it's really been unable to hold above that 28 area. So that's really going to be a key area. But for now, short term, we're looking for maybe a test up to that 50-day moving average around 2560, and we have a possible set risk down here at the 20-day moving average, which is right around 2429. But again, you have to be really careful with stocks like this that have this big of a range, because they can move against you really fast. They can not only move against you really fast, but when you create tails like this, very difficult to remain in a trade if you you were buying up here as the stock went above the previous day's high, and next thing you know, you get stuck down at $24 and creates a lot of emotion. You take the loss, the stock comes all the way back up, only for you to miss out on the actual move. So got to be careful with these stocks that trade this larger type range. Next, I want to take a look at CBB. And I really just like this one because it's had many days here of that relative volume. And I'm going to bring this down a little bit to make it a little bit easier to see. But you can see we've got an obvious higher low here, and we're holding our 20 and 50-day moving averages as we made a move up to this $4 area. We've had a nice pullback now, consolidated, and a move back up to that $4 area. So this $4 area is going to be pretty key resistance. Anywhere from 4 to 410 is going to be strong resistance in there. Our 20-day moving average, you could see how it started to curl back up. So I'd really like to see that $4 breakout into next week, and the moving averages to continue moving up as well to show us our trend is going to continue upward. Another one, so a couple of these next ones have been on the watch list, but I really just like the way that they're set up, and I think it's kind of important for you guys to know that when I create these videos and I'm adding stocks to our watch list, I don't necessarily trade everything all the time. Obviously I can't. I typically will only trade anywhere from 2 to 5 positions at a time, and that's really my max that I'm capable of monitoring without feeling overwhelmed or feeling like I'm going to miss a buy or a sell because I've got too many things to focus on at once. So the first one I want to talk about is Trill. This stock is a great trader and has an awesome range. Been following it for more than a year. I remember it making this huge run all the way to $30, which was absolutely insane. And once it topped out here at 30, it did a perfect downtrend for the next year. And I watched this downtrend all the way from top to bottom and basically said, well, unless we break above this obvious downtrend, then I'm not really too interested in that stock. And lo and behold, just a couple months ago, we were able to trade the trend reversal on this and got a pretty big move on it. So this is another one that makes pretty good range. I actually posted this chart on Twitter the day before this breakout happened. Of course, I didn't get the trade in it for the scenario that I was just talking about. I had a lot of other trades going on, and I just wasn't able to keep my eyes on everything. It got a little crazy with the way the markets were and how everything was moving, but I still really like this setup. It's clearly still trending up. $13 is a really key area of resistance right now. Our 20-day moving average slightly dipped below the 50, but you can see it now cross back above and looks like it wants to continue forward. This may need a couple pullbacks, or this may just continue into right into Monday and maybe even get a push up towards that 15 if we get through 13. This stock moves really big, so don't think because it's up that it can't go higher. If you look right back here, you can see it actually made a move from 1680 basically up to 30 almost non-stop. So just because it's up doesn't mean it cannot go up even more. You got that rejection here at that 13 level, so that's really going to be a key to watch. You've got your moving averages turning up and also some good volume coming into the stock. So this is a really good trader. Has great trend. Already had one successful trade here off the trend reversal play. Also had one unsuccessful trade here as I was looking for a $12 breakout, and it faked me out right there with the high of 1209. So yeah, great trader. Want to keep that on watch, and very interested in getting into something if we get a tight range above 13, possibly for a move towards 15. Next up, I want to take a look at AMD, which has also been our watch list for quite some time, and we have attempted to trade it many of times, and believe it or not, looking at a stock that has basically gone straight up, I only have losing trades in it, and those losing trades come from trying to actually trade this pullback on a bounce reversal play. So here I tried it once where I was looking at the 20-day as support, didn't move, got stopped out, and if I remember correctly, I believe maybe it was in here. I also tried again as we reclaimed the 50, and of course that didn't work. And then of course the stock, grinded all the way back up to 280, 270, 260, consolidated it into here, it gapped and ran. I'm never really going to buy into, I was looking for the breakout here, but I didn't want to buy into this stock after it had gapped up so much. Of course, looking back in hindsight, when hindsight vision is 2020, buying into the gap would have worked great as it had a huge run that day even after the gap. Then it consolidated nicely, perfectly. We watched this, plenty of charts posted through Twitter that I was watching this consolidation area as we hold the 20-day moving average. It broke out and then continued straight up to 470, and of course we missed that one as well. So maybe the third time is the charm, as we've got the rejection here off 470, fallen through 437, and now coming down to kind of test this $4 area and also catching back up with our 20-day moving average. So I'm really going to be watching this for an entry price and an opportunity to get in on a trade for a move back towards 470, and maybe even to five and through $5. So definitely keep this one on watch. It's been a little bit stubborn on my end. I'm sure a lot of people have been able to trade it and make money, but for whatever reason I have struggled with it. But keep it on watch because I do believe we still have opportunity in this one. Next up on the list is GRAM. And I really like this chart. I actually added it to the watch list maybe a week or two ago based off this consolidation period right here. You can see the stock had a huge ramp from 225 all the way up to a high of 430. So actually doubled right there. That was a 100% move. Consolidated over the next month or two. And then you could see huge volume came back into the stock. And look at the volume that came in before the breakout, the relative volume that happened before the breakout. So pretty interesting. Tons of volume comes in, and then the stock makes a move from a low of 360 to a high of 803, so more than another 100% move. And of course, here we are again. We've now consolidated here for about 2 months now. Came down a little bit below our 20-day moving average, which is not uncommon for this chart, as you can see. But coming in on Friday, we reclaimed that 20-day moving average, and not huge volume, but had a little bit of decent volume. And I also like that the volume was less Thursday, increasing into Friday, and I would really like to see it increase into Monday and break out to the top side of this consolidation period for a possible move back up towards these highs around $8. So keep that on watch into next week because that one definitely looks like it's getting set up to possibly make that move. Alright guys, that's going to wrap it up for this week's watch list and market update video. If you guys have any questions or suggestions, please leave them in the comments below. Don't forget to like and subscribe for future videos. Also, check out the website eatsleeptrade.net. We've got lesson videos, we've got lesson pages, we got our weekly market updates on there. Anything you guys can need is on the website eatsleeptrade.net. Anything you guys don't see and want added to the website, give me the idea and I will do my best to try to make that happen. Alright guys, thanks for watching. Good luck into next week, and we will see you in the next video.